Welcome to another episode of I'm Josh saying where applied knowledge is power. Man, look, I have a really dope episode. It really came off of a social media post and it just turned into wildfire. And I just felt like, man, I need to do an episode on this topic. And you'll know what the topic is shortly, but let me pay some bills real quick. So I'd like to thank our sponsors, which is Great Convo Media, where the chatter matters. Make sure you go to greatconvo.com and subscribe to all of the podcasts that are in there, and also subscribe to the I'm Josh Saying podcast. Also, Pivot Technology School, which is a 20-week accelerator teaching data analytics, web development, and cybersecurity. So if you'd like to pivot your career into technology, make sure you go to pivottechschool.com. Also, Sylvia Johnson Real Estate. So if you're looking to buy a home or you're looking to sell your current home, make sure you call 615-400-3294. And then our special sponsor for today, it's Credit Bros. And you'll hear more about the Credit Bros shortly. So let's just jump right into it. So I posted on social media about my experience with credit. And I just recently bought a home. And so, you know, when they was pulling all my information, before they pulled my credit, they asked me, they said, "Hey, Josh, you know, what's your credit score?" You know, hey, all I've been doing is looking at Credit Karma. I've been looking at Equifax. I've been looking at all these things credit wise with my credit card. And I mean, I'm telling you, I'm like, man, I think I'm at about a 725. You know, I'm doing all right. You know, I'm thinking, hey, I'm good to go. And they pulled my credit, and I was appalled. I'm like, what? I've been working for months to try to make sure that my credit was in the 700s, and they came back and said, "Joshua, your credit is at 650." And I'm like, no way. What in the world is going on? So I posted that on social media, and everybody was responding with my guests and wanted me to talk to my special guest today. So I have Christopher Watson here. He is the co-founder of Credit Bros, and he was a financial consultant for Regions, but now he is a full-time entrepreneur helping people change their lives by giving them information about credit. So I'd like to welcome my guy, Christopher Watson, to the I'm Josh Saying family. Y'all make sure y'all give it up. Crowd's going wild. Hey, man, what's good, my brother? How you doing today?
Hey, I'm doing really good, man. Doing really good. I'm honored, man, for you to invite me to your show, man. This is awesome.
Yes, man. I think it's important right now with the way the world is going on that really people take this time to really get their financial houses in order. I think, you know, when things are low and things are down and it's a lot of loss, I think it's a time to kind of regroup and reset.
Absolutely.
So how did you really get into the credit space? What made you say, "Hey, man, I'm gonna start helping people fix their credit"? What was that all about?
That's a good question, man. So it actually started with me being in banking. You know, some of the things that I was actually seeing with, like, you know, when it comes to banking, you have different categories. A lot of people don't know this. You got what's called a mass affluent category. You got a new client category. You got an existing client category. And what I was actually seeing, you know, the space is geared more towards the mass affluent clients. They're the ones with the good credit. They're the ones with, you know, with plenty of liquidity in the bank. And it's not a lot that's geared towards people that's trying to actually understand it and better themselves. A lot of the marketing is actually geared towards what you already currently have. Okay, you have these assets, let's get them over here, or you have this credit, let's get it over here. So my main focus was just wanting to kind of dive deep into the community. Of course, I grew up in North Nashville. I actually seen a lot, you know, growing up when it comes to credit. I've seen, you know, people lose their homes. I've seen people can't get qualified for homes, you can't get a vehicle, different things like that. So I just wanted to kind of go into the community real deep and help people establish, credit and grow as life goes on. So just kind of seeing that journey from the beginning to the end, that end result, helping people helping people reach their goals.
Yeah. So I mean, there's people that have different philosophies out there. So Dave Ramsey is huge on forget credit, and you got to have all this cash and all this other stuff. But everybody is not in that same name and vein. Okay.
Exactly.
And a lot of people in the African American community cannot go write a check for $300,000 for a home. Okay. So I understand his philosophy, but I don't totally believe in his philosophy when it comes to credit, because we have to, as the African American community, we have to really educate ourselves on credit so we can utilize credit to go and build wealth. All right. And you build wealth by going to purchase a home, and you need credit, man. So you gotta have it. So let's go from the beginning, bro. Because I'm the host of I'm Josh Saying, and I'm Josh Saying needs some help when it comes to really understanding. I don't have a lot of debt at all. I don't have a lot of debt, but help me understand how the credit game works. Let's go from A to Z. So we talking to people that may have some experience, that may not have no experience, but we're going to take everybody to elementary school, and let's take them from elementary school to a graduate degree. All right. So help us with what is credit, how do you establish it, and then go from there.
All right, cool. So credit is very unique. Credit is nothing but an algorithm. That's all it is. It's a formula. A lot of people want to know the formula, but the trick to it is just knowing what's inside of the formula. So you got payment history, you got length of credit history, you got aging of accounts, you have inquiries. So all of these different things, and then you got the different account types. So it's just a mix. Credit is simply a report card of how you pay your bills. That's being honest.
Yeah.
When you got utilization and different things like that, a lot of times they say, keep your utilization at 30%. Well, 30% is just going to keep you level. Okay. What 30% does, it doesn't really make your score dramatically go up, but it doesn't make it go down either. It just kind of keeps you at an even space. So that's the 30% utilization rule. So what we do is we tell clients to aim for 25% or below. If you do that, you'll actually see your scores jump up. You'll see them increase. Another thing too, paying your bills on time. You can't miss a payment. One missed payment can set you back 2 years. A lot of people don't know that. Yeah. One late payment can actually set you back 2 years to recover just from that one late payment. So it's very, very important to pay your bills on time. My key thing when I get clients coming in, we educate them on budgeting, because budgeting is the most important thing when it comes to credit. You have to learn how to pay your bills on time. You got to know about cash flow. You got to know about all of these different things before you can even jump into the credit world and start establishing that credit history. So you have to know how to budget. So that's our primary concept. So when you're starting at the very beginning, budgeting is going to be the first thing, paying your bills on time, because that's actually the most critical element when it comes to the credit report. It's worth 35% of your credit report.
All right.
So you have to pay those bills on time.
So 35. So 35. You said 35% goes to what now?
It goes to payment history.
Payment history. Okay.
35%. That makes up 35% of your credit portfolio.
Okay.
Another thing too is the amount of debt that you have. You don't want to be upside down in debt. So that's another thing when we're talking about that utilization aspect. Prime example, I always tell clients, hey, look, I'm going to give you $1,000. Okay. Depending on how long it takes you to give me that $1,000 back, I may not give it back to you again. Okay. So that's a good way to look at it. When someone asks you, for some money, it's okay. If we give it, we give it. But the chances of us giving it again is depending on how they pay it back. So that's how you want to look at the amount of debt that you actually have. And that's what the creditors are looking at as well. Another thing that's very important is the age of credit. Okay, the age of credit. So the age of credit is the length of how long you keep an account. Another thing I tell clients, and I tell people all the time, you know, when you're going to go get these credit cards, make sure that you actually shop with that merchant. I mean, you got to be loyal to them, because you don't want to get a credit card and keep it for a year or 2 years and then you close it out. There's no point in doing that. That's going to hurt your credit score. It's going to bring you down as soon as that account is closed.
Yep.
I get another big question too. Clients ask me, hey, I just paid my car off. My score just dropped 40 points. What happened?
Hey, let me tell you something.
Mm-hmm.
That literally happened to me.
Yeah.
So when I was buying, I was in the process. I've been starting this process of buying this house. Probably April or May. So I was like, okay, I'm gonna pay off some debt. To bring my debt to income ratios down.
Right.
And so let me go ahead and just get rid of this car.
Yeah.
I paid the car. So I'm teetering, you know, based upon, I'm looking at all these things I've been looking at. All right, I'm in the 700s. I'm like, Absolutely. All right, cool. Absolutely. We're rolling. We're in the 700s. If I pay this off, I know I'm going to shoot back up. Man, I paid off my car and my credit score dropped 40 points.
Yeah. So that's actually that credit mix that I was talking about. So, you know, you got revolving debt, you have installment debt, and then you got mortgage. Those are your trade lines. You only have 3. So if you have one form of installment history, which is going to be your vehicle, okay? Once you remove that installment history, your scores are going to drop, because that installment is not being calculated in that algorithm anymore. So what you want to do is, I tell clients, you know, and credit is all about leverage. It's not I need the money. It's a leverage thing. So one thing you can do when you have an installment loan, like an auto loan, and you're getting close to paying it off, get you a personal loan behind that. That way, when that auto loan closes out, you still have that installment history that's going to be reported after that loan is closed. That's a way to keep that credit mix built up, because credit mix is 15% of your credit. So you got to have credit mix.
So 15%. So 15% is credit mix. I'm taking notes, you know.
Oh, I'm sorry.
No, it's all
mix,
good. So we gonna
10%.
So credit mix is 10%.
Yes, sir.
All right. How much is age of credit? What's the percentage?
So credit age is 15%. That's 15%.
Okay. All right, so I have payment history at 35%, age of credit at 15%, credit mix at 10%. Did I miss anything?
An amount of debt at 30%.
Amount of debt. All right. All right, cool.
And then the last one that can knock you out the game, and knocks a lot of people out the game, we're going to talk about inquiries, credit inquiries. Yeah. So even though it's worth a small percent of your credit score, it's only worth 10%. Okay. Of that pie or that credit portfolio. The thing is with inquiries and what gets a lot of people in trouble, prime example, I would say the most common thing is going to go get a vehicle. Okay. When you go get a vehicle, the dealer knows that you want the lowest payment, you want the lowest interest rate, and you want the best term. Okay. They know this, you know, if I can get them to this payment, they're going to ask you, first thing they ask you is what you want your payment to be. That's the first question they ask. And when they ask that question, what they're doing is they're gearing up, because they're going to run your credit through a bunch of different lenders to get you that payment. Whoever is going to get you that payment, that's the lender they're going to go to. So you may go to get one vehicle, but you got 7 inquiries on your account. Okay. Now, the trick to that is, that can actually be removed, but you have to do it. You have to dispute it. And what they'll do is they'll actually take away those mitigating factors, and it won't count as 7 inquiries. It'll just count as 1 inquiry. Okay. That's shopping for a vehicle, or if you're shopping for a mortgage, you have 30 days. You can shop as many places as you want to. I tell people this all the time. If you're going to go get a mortgage, make sure you get the lowest rate. Make sure you get the best payment, and make sure you get the best term. Go to how many ever lenders you want to go to, because you have a 30-day window to shop. The same with a vehicle. Don't just stop at one dealership. go to a bunch of different dealerships and see what they can actually do, because as long as you're doing that within 30 days, you're okay. But after you get that vehicle, let's say you get that loan with Capital One, they approved you, they got you the lowest payment. What you want to do is after that 30 days, you need to send the bureaus a response and say, hey, I was shopping for a vehicle. I did it within 30 days, and I need these inquiries to be removed. And they'll actually remove the inquiries off your credit.
Wow.
Yeah.
Didn't know that.
So that's a huge one that's missed, because the thing is, when you're dealing with inquiries, you don't want to go over 5 within 2 years per bureau. But like I said, you can go get a vehicle and you can get 7 inquiries in a day, so that's another one that's kind of hidden, that's not really paid attention to. And what happens is, when you apply for credit, that can kick you out automatically. If you got, so it doesn't matter if your credit score is in the 700s. If you got a ton of inquiries, it makes it look like that you're desperate for credit.
Oh,
you're just going everywhere. Whoever gonna give it to me, that's who I'm gonna go to. And you definitely don't want to have that perception. Everything has to be good, in good order when you're actually applying for the credit. And then another thing too, Josh, I definitely read the post, and the post was phenomenal. It was a great post. It was eye-opening. It was catching, and it was real. These things really do happen. We tend to look at Credit Karma. We tend to look at, I think Capital One has like Credit Wise. There's so many different credit monitoring services that we're looking at because they're available to us. They're readily available. The thing is, what I tell people with Credit Karma is just a marketing site. When you go on Credit Karma, the first thing you see is recommendations.
Yes.
They're recommending auto loans. They're recommending credit cards. They're even recommending car insurance. Right. That's how they get paid. They get paid to recommend those things. And then another thing too, Credit Karma, any kind of report that you see that updates every 7 days is not accurate.
Okay.
The bureaus update every 30 days. Okay. And the credit bureaus is just a hub. So you got Equifax, you got Experian, and you got TransUnion. All of these different credit monitoring services are feeding to the hub. Okay. So that's how I look at. That's how I tell people. Look at Equifax like FedEx. Okay. That's the hub. That's where everything goes before it gets sent out. Okay. So they're sending everything to FedEx. That's Equifax. Experian, same way. That's UPS. They're sending it all there. That's just the hub and the central location to house your credit portfolio. Another thing too, you got to look at the different Ficos. So FICO is widely used. Okay. I've seen a lot about FICO in that post. So the most common FICO score that's actually used is FICO 8. Okay. FICO 8 is actually used by 90% of lenders. 90%. And that's who's using FICO 8. Now, the thing is with FICO, what was that?
What is FICO 8? No.
Okay. So FICO is another credit score. It's the Fair Isaac credit company is what FICO is. Okay, and it's just another algorithm. That's all it is. Now, FICO is one of those things where it's kind of like Apple. Okay, Apple always drops a software version.
Yeah,
FICO does the same thing.
Okay.
So FICO 8 is just a version. That's all it is. Okay. Typically with mortgages, considering your post, mortgages are using older versions. So what they're doing is they're using FICO 2, FICO 4, and FICO 5. And I'm going to break those down too. Okay. FICO 2 is actually based on Experian. So it's an Experian algorithm. Okay. FICO is just enhanced it, and that's just Experian's way of reporting credit. So a lot of people use myexperian.com. They have their own algorithm, and that is the FICO 2 algorithm. Okay. FICO 4 is based on TransUnion. Same thing. You can go to www.transunion.com and you can get your credit score. They have their own credit algorithm. That's the FICO 4. And then FICO 5 is Equifax. So that's the Equifax algorithm. You can go to Equifax.com. They got their own algorithm as well. And they got their own score reporting. Now, when you see FICO 8, I want to go back to that one because that is, to me, that is the most important credit algorithm out. And the reason why I say that is because everybody uses it. All your banks use it, your auto lenders, a lot of your credit cards, but they have their own versions. So you got FICO 8 bank card. That's what you see when you're looking at your credit card. When you see your credit score, that's being ran through a FICO 8 bank card. For auto lenders, it's FICO 8 auto. So it's just separated. And what happens is when they separate those things, they're geared more towards those particular accounts. So if you have a credit card, prime example, FICO 8 bank card, let's say you got a 750 credit score, 800, whatever the case may be, it's actually looking at how much credit you actually have in the credit card space. And it rates you in the credit card space. Same with the auto loan. Yeah. Same with the auto loan. So if I bought a $50,000 vehicle, my FICO 8 auto is going to be pretty good, versus someone that buys a $15,000 vehicle. Mm-hmm. It's just based on that particular loan type. But the FICO 8, they're all very similar. If you're going to the bank, let's say you're going to go get an equity line on a property or whatever the case may be, they're going to use that FICO 8, and the scores are going to be definitely similar, but usually on your credit card, it's going to be a lot higher because you have a credit card with that company. Okay. Right. That's another thing too. When you have credit, and you have it with a particular company, they don't tell you this. They're not going to never tell you this, but they have an internal credit score. Okay. They call it a custom score. Custom score, prime example. Let's say I bank with, I'm going to use Bank of America. Let's say I got 50 grand with Bank of America. I got a Bank of America credit card. I got a Bank of America auto loan. My score with Bank of America is going to be pretty high. Okay. So if I'm going to go get a mortgage and I go get that mortgage with Bank of America, if my credit scores are not where they need to be, they can actually look at my banking relationship and they can actually give me what's called an exception. Okay. This is underwriting. So they can say, well, his credit score is only a 640, but he got 50 grand with us and he got a credit card with us. He got this with us. So let's make an exception and get him on in the door. Okay. So these kind of things do happen behind the scenes, and I tell clients that, when whoever you're banking with, make sure you have a solid relationship with that bank. And when I say solid, I mean, make sure you got your direct deposit going in there. That's one thing that they look at. Make sure you're not overdrafting the account. Make sure you have a decent relationship with that bank, because when it comes time for you wanting to get a loan or get you a good line of credit, those things that you have will go into play. So that's important as well.
Man, you've given it's just a breadth of knowledge and information. I have a question.
Yeah.
Now, why are the scores so? I know the FICO makes up all three of the scores, but why are the three scores so different?
Good question.
It's like TransUnion is always higher than Experian and Equifax. So, why are they so off when it comes to scoring? Because one may be 700, one may be 650, one may be 680. What makes them so off, and what's that algorithm all about?
So that algorithm is actually geared towards weight systems. Okay. So prime example, I'm gonna take a medical collection, because that's a common collection that falls on credit reports. They're so easy to get on there because it's a hospital bill. You can miss a hospital bill. That's something that just happens.
Right.
Okay. Right. So the weighting of it on those different, when you got TransUnion, Experian, Equifax, the weight of that medical collection can be a lot more on your Equifax report than your TransUnion report. Okay. Vice versa. Same thing with if you had a late payment, if you had an inquiry too much, it's just a weight factor. That's all it is. So they're never going to be even all across the board. They're always going to be a little bit different because they're just weighed a little bit different. The accounts could be worth a little bit more. If you have like 3 credit cards and you only got, let's say you got 3 credit cards and they're being reported on TransUnion, Equifax, and Experian, then the weight is just totally different. The way that they calculate that in their formula is just a little bit different, and that's why those scores can actually be up or down. Another thing too, what tends to happen, a lot of people don't know. So Equifax and TransUnion is very common in the South. Okay, so if you apply for credit in the South, typically it's either going to be TransUnion they're going to pull, or they're going to pull Equifax. Always. If you go up north, it's going to be Experian. Okay, so what happens is you may have an account that's being reported on TransUnion, but it's not being reported on your Experian report. That's another reason why those scores can be off a little bit. So it just kind of depends. If you choose an up north company that doesn't pull TransUnion or they don't pull Equifax, their reporting can be a little bit off. And sometimes things are being reported and there's always errors on credit reports. Always. There's always an error. 85% of credit reports in the United States have errors on them. That percentage actually could be even a little bit higher. I think that was from last year. So that could be a little bit higher. So there's always an error. There's always going to be an account that's not showing up on your Equifax report, or not showing up on your Experian report, or not showing up on your TransUnion report. But that's just a matter of just kind of keeping up. And like I said, keeping an eye on your report card. You have to keep an eye on it because they're going to make a mistake. They're humans. They're going to make a mistake. Mm-hmm.
Right. So let's talk about, so we have people that may have bad credit.
Yeah.
Like what is the blueprint to really start to make amends to the credit, and different tips and tricks to start raising that credit score?
Absolutely. So Josh, when people have, bad credit and they come in, and the first thing I ask them is, what kind of credit do you currently have? Because that's important. If they already have a active credit card, it could be the way they're paying that card. It may not be hidden. I'm gonna drop a huge jewel. A lot of people do not know this. So, and I'm gonna use an example. So let's say you got a credit card with $1,000 limit. Okay. Let's say the bill is due on the 15th of the month. Okay. So what you want to do is, if you use that card, remember I said the 25% or below. So I'm going to say 25% in this situation is where we're going to keep the credit utilization. So what you want to do is, let's say we go to Walmart. It's Christmas time. I spend $800. Okay. I swipe my credit card. I ain't had that much cash on me. I spent $800 on my credit card. Well, when it comes time to pay the bill on the 15th, I got the money now. So I'm going to go ahead and pay my bill down, and I'm going to pay it down to $250. I'm going to bring it back down to 25% of that $1,000 credit limit. Okay. The trick is, I cannot use that card again until after it reports to the bureaus. So the statement close date is when I can actually swipe that card again. So what happens is, sometimes, we pay our bills, but we turn around and use the card right back again, and we run that utilization back up, and it hasn't even reported yet. Gotcha. So that's a trick to the credit cards that's hugely missed, that I see all of the time. Another thing too is collection accounts. Now, I'm real big on telling clients to pay their bills on time. Very big on that. However, life does happen. Look, right now we're in the middle of a pandemic. Yep. It happens. It's so many people have been reaching out to me. Look, I can't pay this. It's going to collections. They're panicking. What do I do? There's a couple different things you can do to deal with collections. The main thing is keeping them from harassing you. That's the number one thing, because nobody wants somebody calling them 24/7 saying, "Hey, I need money," and I ain't got it. So what we do is, in that situation, we do what's called a cease and desist. That's a legal letter that you can actually send out to that creditor and say, pretty much, stop contacting me. And I'll get with you when I can. It's one of those kind of things, but it keeps you. It kind of just creates a better mental for you. That's the number one thing that you need when you're trying to rebuild. You don't need a bunch of people hounding you. You're going to get unfocused. You're going to kind of be all over the place. and you're going to miss other stuff, your active accounts, trying to worry about your inactive accounts, so to say. So that's very important. Another thing too, you know, the trick to it with the collection companies, you don't owe them. I'm just gonna be honest. You know, I gotta say it.
Come on.
Yeah, I got to. You owe the creditor. So prime example, if I had a Sprint phone and I was using Sprint and I failed to pay Sprint, and then Landmark picks it up or whatever company picks it up, I never did business with them. I did business with Sprint. Yeah. And Sprint is a $1 billion company.
Yes.
Sprint is gonna get their money back. Trust me, they're gonna write it off on their taxes. They're gonna get their money back. That's a loss. They have the best accountants in the world. They're gonna make sure that $800 that you owe them, they're gonna get that back when they do their taxes.
Yeah.
Okay. And what it is, that's just one of those situations. So you go into what's called a dispute process. You can definitely dispute collection accounts. It's nothing wrong with disputing collection accounts, but another thing too, you know, mainly you're looking for errors. A lot of your problems are going to be either in your personal information. There's so many credit reports that I pull on a day-to-day basis where the names are spelled incorrect. Mm-hmm. If somebody may have a sister and their sister's information is being reported on the credit, I've seen the craziest stuff, especially like prime example, I'm a senior, I got a junior. When he gets older, I got to make sure that he's putting junior on his applications. If not, that stuff may roll over into my credit report. I love my son, but hey, credit is credit. You know, I'm gonna teach you the right way to do it, but you know, I don't need you messing up my stuff because I was 18 once. I know how they go. And it's just one of those things where you really gotta, credit is something you gotta keep your eye on. You really do. I have been a victim of identity theft. I actually had someone buy a car in my name. That's wow. Yes. And the car was newer than mine. I was very hurt, very hurt. But even in that situation, like now, it literally may take me 7 hours to get a car just because of that previous experience. I have so many security protocols on my credit report now because I don't want that to happen again. You know, that person bought a vehicle and they missed the. You got to stay on top of it.
Got you. Yeah, I think something happened when you. It may have been on my end. It was the internet or something. Something froze up, but it's all good, man. So, it's very, very important, and that's why I really wanted to have you on because as we go into these next, I say these next 10 years are going to be very vital to us really closing this thing called the wealth gap. We talk about it all the time, but we have to utilize all the tools in the tool belt. Absolutely. And one of them is credit. And so everybody has not started off on a good path. Look, I'm still learning. I just bought a house. All right. I'm thinking I know everything about credit until I have a 700, over 700, and they come back and tell me my credit score is 650. Now, the reason why it's important to me is because I want to get the lowest interest rate. Like I want my interest rates to be as low as possible. And when you have good credit, when you can go to the car dealership and get 0% or 1 or 2% instead of 20 and 30%, which is what's happening in our communities because we have horrendous credit. I'm glad you was able to come on and talk about it. There's so much to this thing, man.
Oh man, I could go all day, man.
I know. and I know you really, this is what you do for a living. So I really don't want you to give all the jewels for free. We gotta, people have to pay for the jewels. So that's right. Really, as we go into a new year, I would say give us some steps right now that we can take on right now as we're doing some financial planning and things of that nature. What are some steps that we can take to really better our credit scores going into 2021?
Absolutely. So the first thing, Josh, I would say is actually getting your report pulled. That's the first start. A lot of times people don't know where they're at. They don't want to look at it. They're scared of it. but you can't be scared of it. We actually have a credit monitoring site that is 100% accurate. It took a lot to get it. But we do have it. We're gonna have it readily available going into the new year for clients. And it also has budgeting tools. You can link your bank account to it. I mean, it's like top of the line, man. It's off the chain. I love it. I'm still actually trying to watch videos on it and still trying to learn everything about it because it just does so much. But the main thing is actually just pulling that report, taking a look at it, not being afraid of it, and go to someone that can actually help you. I think a huge, and I know we're talking about closing that wealth gap. Something that I see a lot on social media is the bad advice. That's one of the most, oh my God, it eats me up, man, because you can see somebody saying, well, get you a self-lender card or get you this. They don't know how many inquiries that person has. They don't know, the bad advice. So separating the bad advice and getting with someone, there's people out there that can really, really help. That's very knowledgeable. And it's just a matter of just getting with those people, I would honestly say. Creating yourself some real goals, some realistic goals, and going after them. Credit is one of those things where it's a learning process for everybody. It changes a lot. I'm telling you about FICO score 8, and they got FICO score 9 that's about to drop, and credit scores are going to go to 900. A lot of people don't know that. So, I'm those kind of things I study because that's my field. I got to stay on top of everything. But that's why I say, you want to get with a professional that can really, really help you. Nobody's situation is too bad to be helped. That's another thing. I know bankruptcy is like a huge thing in the community. And we get letters. Hey, you just need to you may owe 2 credit cards, and they're sending you bankruptcy letters. Right. And just the bad advice. Hey, go ahead and file bankruptcy. If you file bankruptcy, you ain't got to worry about it. But that's something you don't want to do. That's going to set you back. So just being able to really, really hone in and get the right education, get the right knowledge behind you, and get someone that can really help you. That would be my most important thing.
That is awesome, man. So how do they get in touch with you? How do they book a consultation? Absolutely. How do they, I'm going to hire you as well, because really I don't have a lot, but I really want to clean it up in a way because I'm really starting to want to make some moves in real estate development. Yeah. And I want my credit score to be all the way right.
Man, so we're gonna talk off this, man, because that's the next move for me too, man.
Yeah, man. So I want to make sure it's all the way together. So how do they get in contact with you? How do they book a consultation? All that good stuff.
Absolutely. So our website is www.thecreditbros.com. You can look us up. They can look us up on Facebook as well. They can just type in the Credit Bros. And there's a scheduled consultation link in there. If they go directly to the website, they can definitely book a consultation. The consultations are actually free. It doesn't cost anything to talk to us for 15 minutes. We'll literally go over everything that we do. And if we can help you, we'll help you. And we're honest. Like if you don't need credit repair, I'm not gonna take your money. Like we're not gonna do it. I'm just gonna tell you, hey, look, you need to do this, and you should be okay. Because it's all about helping the community. But they definitely can book a free consultation with us. Just go directly to the website, and they can book that consultation. We also have a phone number, and that's 813-733-0781. And they can reach us that way as well. We'll be ready to help them.
Man, that is amazing. Well, thank you so very much for taking time out of your busy schedule to talk to my audience about credit and repairing your credit. We've been really focused on securing the bag all of the last 10 or 11 episodes. This is the last episode in season 1 of the I'm Josh Sam podcast. And I wanted to end it on credit because it is very important that us as a community get our credit scores right so that we can be in line for home ownership. We have to start owning, and we cannot own anything unless you have the cash to write a check or you have to leverage your credit. And we have to make sure that everybody has great credit. So make sure y'all go to www.creditbros, that's BROS. So credit, CREDIT, bros, BROS.com. Book your consultation. Tell them that I'm Josh saying, you heard it on I'm Josh saying, for a special rate. And we don't even know what that special rate is. I just made it up.
We'll take care of it. We'll take care of it. That's one thing. That's one thing about ownership, man. I can make some things happen. Yes, sir.
Yes, sir, man. So thank y'all so very much. Thank you for tuning in. Make sure y'all go subscribe, listen, rate, and comment on all your streaming platforms on the I'm Josh Saying podcast. Thank you all for rocking with us for season 1. This closes out season 1. We'll be back in 2021 with more new content, more dope information to help you take your life to the next level. We out.
All right.
Peace.
Yep.